uh, often the question is basically on the ordering, why do stock declines need to happen? Why not just look past the recession that will come and just be long equities today? And the reason why that is because you have to have equity weakness in order to have, and when I say equity weakness, I mean company weakness, both through equity prices, but also through falling earnings in order to get the recession to occur. And the reason why that is because only when you have falling equity prices does demand slow, and only when you have falling earnings do labor markets weaken. And I think you could see that very directly, a smaller share of the economy, but you could see that very directly, which is, when did the tech layoffs start? The tech layoffs started when we saw tech stocks fall in 2022 substantially. The stocks fell, right? The response was to that, to the stocks fell, the earnings fell, and the response to that was to increase their layoffs. Now, of course, that was only one small sector of the economy. It only represented 2.7 million people in terms of employment. It wasn't that big a deal on the macro level. But I think what it highlights is the ordering, which is you don't get the sort of labor market deterioration until you get the point where stocks and earnings fall. And so just think about that dynamic when you're thinking about think about that case study when you're thinking about how this is likely to play out at the broader macroeconomic level. There's a lot of work to do. If we just take a step back on the overall economy, we're still running a secularly tight labor market. Nominal growth remains elevated relative to what's appropriate for the Fed's mandate. And despite the fact that, and on the margin, we have experienced a meaningful easing over the course of the last 4, 5, or 6 weeks. All that aligns with a stronger economy, not a weaker economy. And all that is inconsistent with the significant amount of interest rate cuts that are being priced into the short rate and the long end of the market, the bond market. And so when we look out to what 2024 will probably look like, my guess is we're going to see a real disappointment when it comes to meeting those incredibly high expectations for cuts. More than anything else, that's probably going to be the theme. In the same way, for bondholders, we had the biggest theme in 2023 was the cuts that were expected, particularly after SVB, didn't come to fruition at all.